James, good to have you here on the show. You outlined a case to us some time ago for why this company was going to continue to rally. This was pre-COVID. Moving inside instead of the gyms, even before they had to do it. So kudos to the coverage. Walk me through the reason for your latest upgrade on the stock's price.
Yeah, I mean, I think everybody at least that was paying attention knew that it was going to be a strong quarter. Anybody that had talked to somebody that's tried to buy a Peloton bike over the past few months would tell you that it's going to take a while for that bike to be delivered. I think they put up good numbers on the top line, 113% growth in terms of their subscription, but it was really a welcome surprise for me, and I think for a lot of investors, just how profitable knocking at the company and a lot of startup companies coming out of the IPO was that this was going to be a long path to profitability. The company had targeted 2023 this year. They would be EBITDA positive. They were EBITDA positive in the third quarter, and they were EBITDA positive in a big way in the fourth quarter that they just reported, to the tune of $143 million. That was double. Maybe more impressively, their guidance for next year, 200 to 275 million in EBITDA, substantially ahead of where the street was, substantially ahead of where we were. And I think it's an indication that this isn't just a COVID play per se, right? I mean, obviously demand has spiked, and they really haven't had to spend a whole lot in terms of marketing their product as of late. But even as we get into late this year, they believe that they're going to be nicely profitable.
So profitability is showing up, and as we just discussed for Chewy, they're not there yet. So it is somewhat unique that we have a new company here, a subscription model, a new product that is turning profitable pretty quickly. We know that the brand obviously has extreme power, right? I mean, you can buy a lot of different exercise equipment. I mean, we've seen the stock of Nautilus do well too, but for the price point, there's no debating Peloton clearly is a leader in a lot of different categories. James, the thing I'm trying to figure out for investors in the stock price, and I know obviously you're thinking about this too, is how does the growth rate though get better from here? I mean, obviously the subscribers are going to stick around and they can continue to make money off that. The brand power is not going to go away. But how does Peloton have a better scenario than the one we just went through for 6 months, where people were forced to stay inside and their gyms were literally closed?
Yeah, it's a great question. It's the $1 million question. I don't know that we're going to see better growth, accelerating growth from here. But keep in mind, we're still at the stage where they're doubling their revenues on a year-over-year basis. And what they're telling us is that at least for the next 12 months, they're going to be pretty close to that. They crossed 1 million subs in early May. It took them 6 or 7 years to get to that 1 million subscription mark. It was a big deal. They're now guiding to 2 million subs by the end of this fiscal year, so the end of June. So, I mean, that's pretty astounding stuff. To the longer term growth question, it really comes down to the addressable market. And they've made a lot of news just this week that I think suggests that their addressable market is expanding by leaps and bounds. They came out with 2 new products. They used to be a one-trick pony. They came out with a treadmill a couple of years ago. Treadmill was way too expensive at north of $4,200. This week they announced an upgraded bike, and at the same time a cheaper bike, right? So down to $1,800, $1,900, which is a price point that I think they're going to be able to target a different income demographic. And then I would argue, more importantly, they came out with a $2,500 treadmill. That's really a mainstream competitive price. And as we know, the treadmill market is substantially larger than the spin market, the exercise bike market. And so if they can become a major player in the treadmill market, I think there's a lot of upside from here.
James, that's a really interesting point, because the expanded demographics they can target for income based on lower price points, the products as well. People can have a bike and they can have a treadmill. My parents set up the gym in their basement. They've got to work out, right? So there's definitely that part of that's expanding. In terms of the growth rate on the top, do we know what that's going to be equivalent to? I mean, at 180%, obviously the bar is high right now. How do we then kind of gauge the amount of market that got pushed up for their original product, right? So a market share that they were going to be able to address that got fast forwarded versus the new one maybe that is expanding still. I mean, how do we figure out how much of the exercise market is left for Peloton after all of this?
Yeah, I mean, a lot of those questions will determine the future of the company, and it's hard to anticipate here. But they're getting into for them untapped markets that potentially have the size to grow their business multiples of where it is today. Clearly, they're pulling a lot of customers from the traditional gym market. There are 60 million gym members in the United States. I think the number is more like 90 million in the markets globally that Peloton is in currently. And they've got 1.1 million subscribers. So that is an almost limitless crop of customers to draw from. Obviously, I'm not calling for traditional gyms to go away, but as we've talked about all the way going back to pre-pandemic, I'm a big believer that there's going to be a long and significant secular shift away from traditional gyms and towards at-home fitness. It's just too convenient, and the product offering, the social aspects, the music configuration is just way too compelling for that not to draw increasing numbers of customers from traditional gyms.
Hey, James, one other one, just real quickly, because we're going to trade this now. Any idea what the growth rate, over the next year, like what should we expect it to drop to after this, the top line?
Yeah, I mean, their expected subscription growth and their expected top line growth is in the 90s for the next 12 months, 90% plus.
Okay.
And if history is any indication, management likes to be fairly conservative on these numbers.
Okay.
So I think it's entirely possible, entirely likely that a year from now where we have doubled yet again. And that's astounding, particularly for a company that, oftentimes these early stage growth companies are trading profitability for growth. These guys are able to grow significantly and still be profitable. That's a pretty rare combination.